If you can't qualify for the passive activity loss allowance, what will happen is your losses will become suspended. Now, when a loss is suspended, it's reported on Form 8582. That is in your overall tax packet that you're going to get from your CPA, or if you're self-preparing, you will see Form 8582. And Form 8582 is going to report the total amount of losses that you have received in the past and the total amount of losses that you're receiving in the current year. It's going to aggregate that for you, and that those suspended losses are going to carry forward year to year to year. Now, you can offset those suspended losses in the future if you are involved in activities that generate passive income, or if you liquidate some of your holdings. So if I sell a rental property for a $100,000 gain and I have $150,000 of suspended passive losses, I don't have to do a 1031 exchange when I sell that rental property, because my suspended passive losses completely covered the gain plus some. So I would sell the property for 100K gain. I would offset the 100K gain with 100K of passive losses that have been suspended. And in this example, my remaining suspended passive losses would be $50,000, and I would continue to carry that forward until I can either, again, generate passive income or liquidate another passive investment that I have and offset that gain. The key here, though, is that you do have to dispose of substantially all of the rental real estate activities. The big thing that I like to tell clients is, when you invest in syndicates, or when you invest in your own rental properties and you're creating these large passive losses, we might do a cost seg study and then get 100% bonus depreciation. So we might create these big passive losses. It's not a bad thing if you can't use them. What it does, it provides us flexibility. So again, going back to my example, if I have $150,000 of suspended passive losses and I'm liquidating a property for a 100K gain, I don't have to do a 1031 exchange. I don't have to look at deferred sales trusts. I don't have to look at anything, because I can just sell the property for whatever amount, get my 100K gain, and totally offset that 100K gain with my suspended passive losses. One of the questions I always get is, well, if I've got 3 properties, property A, B, and C, and I sell property A, can the losses that property B and C generate offset the gain on property A? And the answer is yes, absolutely. You do not have to make the aggregation election to do that. It's just, once they generate a passive loss, it's just considered a passive loss. It doesn't matter what property it was applied to. You can totally offset the gain from sales of other rental activities. That also includes liquidating a syndication. So sometimes what our clients will do is they'll be invested in the syndicate. It'll liquidate early. Maybe the value add happened early on. They got a really nice offer and they decided to take the offer multiple years in advance of the timed liquidation. Well, if you're investing in that syndicate, that's your tax plan at that point might be blown up. It might be this time of year, and now all of a sudden you've got a 100K gain that you're faced with from this syndication. Well, what can you do? You can go and invest in another syndication that is running a cost seg study, generating 100% bonus depreciation, and you can use that loss that they're going to give you on that K1 to offset the gain on the liquidation. And if we ever get to the yes, we want to sell it situation, what we advise clients to do is not to default to the 1031 exchange. We love 1031 exchanges. We use them all the time. It's our last resort strategy. We always look for, can we put the funds somewhere else that's going to generate a loss? Do you have suspended losses on the books already? If we can create these losses, let's go ahead and do that and then liquidate the property. When I put $100,000 into a syndicate, my capital account equals $100,000. If I receive a loss of $90,000, like if a passive loss of 90K is passed through to me, my capital account is now $10,000. If I receive distributions of $10,000, my capital account is now $0. So what that means is that I cannot take any more losses. Your capital account, and this is something that everybody should track. I would highly recommend that you keep a spreadsheet that tracks how much capital you put in, how much loss you've received, how much distributions you've received over the course of the investment. We have, going back to the whole making sure that you have a professional team, we've helped a few of our clients go back to their prior syndicate investments because the accounting team was not properly tracking the investor capital accounts, and essentially would cost the clients anywhere between $20,000 to $40,000 in the examples that I'm thinking of, just because they underestimated or that they underreported what the capital account was. So